Securing authorization to run a logistics enterprise inside the United States requires the meticulous assembly of a physical documentary record. Winning an E-2 treaty investor visa is a strict exercise in documentary architecture. It demands mapping physical reality precisely to rigid statutory requirements. For Shipping Factory LLC, the attorney's 5-page cover letter serves as a routing mechanism for the consular adjudicator. The true foundation of the petition lies behind that summary text. It is built entirely on a 23-exhibit table of contents, containing property deeds, official tax returns, and bank statements. The practitioner's burden of proof is absolute. They must take a client's abstract commercial intent and compress it into an unassailable, mathematically verified documentary record. For Shipping Factory LLC, the immediate challenge is accounting for a very specific number. The petition must prove the legitimate deployment of exactly $281,164.78 in capital. To survive consular scrutiny, that capital must support the 4 statutory pillars of E-2 approval: lawful source of funds, at-risk capital, non-marginality, and executive capacity. We can reverse engineer this successful petition by tracking exactly how the capital moves through each of these 4 legal pillars. Consular processing is unforgiving. A single undocumented claim or a discrepancy in a wire transfer creates an evidentiary gap that triggers immediate visa denial. Consequently, every single dollar of the investment must be assigned a specific evidentiary anchor. The first requirement is the lawful source of funds. Consular officers demand an unbroken chronological chain of custody, not a simple declaration of legality. Capital moves quickly across borders, but international wire transfers automatically invite scrutiny. Every movement must be thoroughly demystified. Capital originated from a 6.2 million lira property sale in Turkey, deposited into the spouse's account. It was converted to US dollars and routed through Wise payments in trackable $10,000 tranches. Finally, the funds routed through a Chase account into a domestic commercial escrow. The remaining $150,000 bypassed international borders entirely. It was derived from Shipping Factory LLC's own domestic retained earnings, establishing that the enterprise already generates consistent commercial income. A lawful source is confirmed only when the chronological chain leaves no geographic or chronological gaps for the adjudicator to question. The second requirement is the at-risk threshold. The legal standard requires that capital must be irrevocably committed to the business prior to visa adjudication. This chart breaks down the total $281,164.78 investment, separating real property and operational equipment. The bulk, $221,839.22, purchased a commercial warehouse in Texas, anchored by a closing statement, a purchase agreement, and a warranty deed. Executing a closed commercial real estate transaction perfectly answers the at-risk standard. The investor cannot simply withdraw these funds and walk away if the visa application is denied. The remaining $59,325.56 was directed entirely toward enterprise-specific, non-recoverable physical assets. This covered heavy industrial purchases, including a vertical baling press, electric pallet jacks, and a semi-automatic stretch wrap machine, all explicitly verified by paid invoices. Purchasing specialized operational machinery proves the investor is exposed to partial or total financial loss if the logistics business fails to launch. The at-risk requirement enforces a rigid boundary. It separates actual, operational business investments from capital that is merely parked safely in a U.S. bank account. The third requirement, non-marginality, is the most common failure point for speculative companies. A business is deemed marginal if it projects generating only enough income to provide a minimal living for the investor and their immediate family. Shipping Factory LLC defends against this by presenting a pre-existing active physical infrastructure alongside a localized workforce. The petition proves workforce reality by submitting active W-2 payroll records and local Texas driver's licenses for 3 U.S.-based employees. To prove enterprise health, the petition includes the fiscal year 2025 profit and loss statement, documenting substantial gross revenue and ongoing operational expenses. This strategy relies on demonstrating established present-day operational capacity, rather than leaning on highly speculative 5-year future business plans. Defeating marginality requires weaponizing hard documentary proof of local job creation and an active economic footprint. This eliminates adjudicator doubt regarding the company's contribution to the local economy. The final requirement is executive capacity, focusing entirely on the operational role of the principal investor, Metin Ely. The regulatory standard dictates that if the business requires the E2 investor to perform routine, hands-on manual labor to survive, the visa will be denied. The 3 U.S. workers established in the previous exhibits directly validate the investor's claim to executive status. The physical duties of the warehouse, operating the pallet jacks and stretch wrap machines, are delegated to the U.S. employees, freeing the investor from daily material handling. Mr. Ely's responsibilities are strictly high-level, managing the operating budget, forecasting warehouse capacity, and maintaining complex vendor relationships. The physical output of the U.S. workforce creates the operational capacity necessary to justify the investor's designation as a manager. Zooming out from the individual legal pillars, we see the holistic architecture of the compiled petition. The master strategy is absolute consistency. Every single declarative claim made in the attorney's cover letter is strictly anchored by a third-party document. Consular officers do not reward brilliant business ideas or passionate entrepreneurial intent. The E2 framework exclusively rewards executed capital deployment, meticulous financial tracing, and verifiable tax compliance. Without this precise evidentiary mapping, even a highly profitable, perfectly legitimate business will face immediate visa denial. The true value of an immigration practitioner lies in taking the chaotic, daily operational reality of a business and structuring it into a linear,